Welcome to the DSEJ teleclasses, a digital initiative by Directorate of School Education, Jammu. Dear students, Namaskar. Myself, I am Ajay Mani, teacher and master coach, Diet Punch. Students, in our last teleclass, we have gone through shares and debentures from the unit covering financial literacy. So today we are going to take our next topic, that is stock exchange and SEBI. But before moving further towards stock exchange and SEBI, we need to clear some important terms regarding stock exchange. The first term we already have discussed in our last daily class is share. What are shares? We know that the capital of a company is divided into small units called shares. Similarly, another important term is debenture. Debenture, we know that the long-term financial instruments issued by company with prefixed rate of interest. Then another term is trade. Trade is simply buying and selling of different goods and items. Here, shares, commodities, debentures, bonds, etc. Then another important term here is turnover. Turnover is the total amount of goods or services sold by a company in a particular period of time. Then we have stockbroker. A stockbroker is a person who buys and sells things for other people. Another important term to learn here is stock investors. Stock investor is actually a person who invests in stocks. So these important terms you all need to know for covering this unit on financial literacy. So moving further towards stock exchange, firstly, let us begin with knowing the definition of stock exchange. So what is the definition of stock exchange? We are going to discuss an authentic definition on stock exchange from the Securities Regulation Act of 1956. This Regulation Act of 1956 defined stock exchange as an association or organization or an individual which is established for the purpose of assisting, regulating, and controlling business in buying, selling, and dealing in securities. So a stock exchange is, it might be an association, it might be an organization, it might be an individual, but that needs to be established for the purpose of assisting, regulating, and controlling business in buying, selling, and dealing in securities. Stock exchange is a market where financial instruments are traded. Last day, we have discussed about the in our last daily class we have discussed about the financial instruments used in financial markets. The important financial instruments we have already discussed are shares and debentures. So shares, we don't need to repeat them again, shares and debentures. So basically stock exchange is a market where financial instruments like shares and debentures are traded. Then stock exchange provides trading facilities. So stock exchange provides trading facilities to investors through stockbrokers. Stockbrokers, we already discussed in a previous slide that a stockbroker is a person who buys and sells for the investors. The investors can't buy and sell directly on a stock exchange. So a broker is needed, a middleman is needed. So a stockbroker is the person who buy and sells for the investors. So stock exchange provides trading facilities to investors through stock brokers. Then we need to know what is traded in the stock exchange. In stock exchange, an investor may trade shares issued by companies, debentures, then financial derivatives, bonds, etc. These all things are going to be traded in stock exchanges. Then there are almost 24 stock exchanges in our country. But as far as your syllabus is concerned, we have to learn about the two important stock exchanges. One is the Bombay Stock Exchange and another one is the National Stock Exchange. So first of all, we will talk about Bombay Stock Exchange and then we will move further with the National Stock Exchange. So Bombay Stock Exchange or BSE is a limited company, also known as the Bombay Stock Exchange, is an Indian stock exchange located on Dalal Street in Mumbai, that is Bombay. So Bombay, we got two important points here. One is that BSE or Bombay Stock Exchange is a limited company. The another one is it is located on Dalal Street in Mumbai. Then as far as the history of this Bombay Stock Exchange is concerned, it was established in 1875. It is the oldest stock exchange in South Asia and also the 10th oldest in the world. So these 2 points regarding history are important and you need to remember. One is it was established in 1875 and the record is it is the oldest stock exchange in South Asia and also the 10th oldest in the world. If we look at the world scenario, this Bombay Stock Exchange or BSE is the 10th oldest in the world. Then comes the National Stock Exchange. National Stock Exchange of India Limited is the leading stock exchange of India, located in the Mumbai city of Maharashtra state. So it is also there in Mumbai. It is under the ownership of some leading financial institutions, banks and insurance companies. So some leading financial institutions, banks and insurance companies own this national stock exchange. As far as its history is concerned, National Stock Exchange was established in 1992 as the first dematerialized electronic exchange in the country. So it is the first dematerialized electronic exchange in our country. Then there is another term called Sensex, and it is also mentioned in your syllabus. So what is Sensex? It is actually, Sensex is BSE sensitive index called Bombay Stock Exchange Sensitive Index, and is a free float market weighted stock market index. It is basically a free float market weighted stock market index of BSE. The Sensex is comprised of 30 of the largest and most actively traded stocks on the BSE and provides a gauge of India's economy. So the main thing is, it comprised of 30 largest and most actively traded stocks. Then the next point is, the Sensex is reviewed semi-annually. So every year the Sensex is reviewed in June and December, and is created in 1986. The Sensex is the oldest stock index in India. So it is reviewed semi-annually, that is in June and December, and is created in 1986. The Sensex is the oldest stock index in India. Then comes Nifty. Like Sensex, Nifty is the index of National Stock Exchange. So Nifty stands for National Stock Exchange 50. So its full form is National Stock Exchange 50, and is the equity benchmark index of the National Stock Exchange, that is NSE. It is the equity benchmark index of National Stock Exchange. It was introduced by NSE in 1996. So National Stock Exchange introduced it in the year 1996, and its other aliases are, other names are, it is also known as Nifty 50 and CNX Nifty. So other terms for Nifty are Nifty 50 and CNX Nifty. Nifty is an index in India consisting of 50 stocks representing 23 industry sectors. So 23 different industry sectors are being represented through 50 stocks. So Nifty is an index in India consisting of 50 stocks, representing, those 50 stocks represent 23 industry sectors. The constituents of index changes periodically depending on liquidity, availability of floating stock, turnover, and also volume of transactions. So this is all about Nifty. This is the main things we need to know about Nifty. Then comes the importance of stock exchange. Stock exchange plays a vital role by providing the backbone to nation's economic infrastructure. So it helps our nation to be economically sound. So stock exchange plays very important role for nation's economic infrastructure. Then stock exchange help companies raise money to expand. So companies also need to be expanded. So stock exchange always help companies to raise their money, raise their funds for expansion, for their expansion. They also provide individuals the platform to invest and a facility of liquidity. Now, stock exchange also provide individuals the platform to invest. They provide the investors a good platform to invest and a facility of liquidity. So what is liquidity? Liquidity is the degree to which a security can be quickly purchased or sold also in the market at a price reflecting the current value. So this is liquidity. Now, there is a statutory body that regulates the working of stock exchanges in India. So the body is SEBI. SEBI stands for Securities Exchange Board of India. Securities Exchange Board of India, also called SEBI or SEBI, is a statutory regulatory body established on the 12th of April 1992. So as a student of economics or as a student who is going to learn the basics of financial literacy, you must note down and know about these important dates as far as the history of this financial setups like exchanges is concerned. So SEBI is a statutory regulatory body established on the 12th of April 1992. It monitors and also regulates the Indian capital and securities market while ensuring to protect the interests of the investors, formulating regulations and guidelines. Then comes the functions of SEBI. SEBI is primarily set up to protect the interests of investors in the securities market. So it was primarily set up to protect the interests of investors. Then another function of SEBI is it promotes the development of the securities market and regulates the business. Then SEBI also provides a platform for stockbrokers, sub-brokers, portfolio managers, investment advisors, share transfer agents, bankers, merchant bankers, trustees of trust deeds, registrars, underwriters, and other associated people to register and regulate work. So SEBI provides a platform to all these mentioned persons and other associated people so that they may register and regulate their work. So these are the functions of SEBI. Other function of SEBI is it regulates the operations of depositories, participants, custodians of securities, fund portfolio investors, and credit rating agencies. So it also regulates the operations of depositories. It also regulates the operations of participants. It also regulates the operations of custodians of securities. Even it regulates the operations of fund portfolio investors and credit rating agencies. Then it prohibits insider trading. So insider trading, is not a good thing for country's economy, because insider trading is actually the fraudulent and unfair trade practices going on related to the securities market. So as far as the investors are concerned, they need to be more secure. So SEBI acts to provide all these securities to the investors by prohibiting insider trading or fraudulent and unfair trading practices related to the securities market. Then another important function of SEBI is that it ensures that investors are educated on the intermediaries of a securities market. No doubt, education is very important for the investors. They need to know on the intermediaries of security markets. So SEBI makes it sure that investors are educated on these things. Then comes, it monitors substantial acquisition of shares. It monitors substantial acquisition of shares and takeover of companies. So taking over of companies and substantial acquisitions, they all are going to be monitored by SEBI. Then comes, SEBI takes care of research and development. This is important. So SEBI takes care of research and development to ensure the securities market is efficient at all the times. So in order to make this market efficient all the time, SEBI takes care of their research and development. Now, as a regulatory body, when while providing all the guidelines for running proper exchanges, SEBI has developed a centralized web-based system. Centralized web-based system for logging and tracking investor complaints. SEBI has developed a centralized web-based system, a portal, a website where the investors have their accounts so that they may lodge any complaint regarding their investments and other things involved. So SEBI has developed a centralized web-based system called SCORES. SCORES stands for SEBI Complaint Redress System. So SEBI Complaint Redress System is the system where any investor may log in and complain and register their complaint regarding any aspect. So this platform SEBI is providing is now being known as SCORES, that is SEBI Complaint Redress System. And the good thing is, anyone who has a grievance can file complaint using SCORE. Now, it is the duty of the SEBI as a statutory, as a regulatory body providing guidelines, that they need to be quick. They need to provide a good platform. So as far as SCORE is concerned, where any body's grievances, if someone lodge a complaint, they they used to anyone who has grievance can file complaint using score, but the complaint is redressed within 30 days. So this is a good thing SEBI is doing. Okay, so students, we have discussed a lot about the financial aspects of this unit third, that is financial literacy or the stock market operations. In our last tele class, we have gone through the shares and debentures and how they are going to be different from one another. Today, we have learned about the stock exchange and its working. What are the two terms like Sensex and Nifty, as we learned about BSE and NSE, that is Bombay Stock Exchange and the National Stock Exchange. The two terms, the two indexes, Sensex and Nifty, we have gone through. So as a student, you need to know all these aspects. So do revise all these terms, do go through the content in your textbook and prepare well in advance for your exams. So with this, I would like to thank you for attending this tele class, an initiative by Directorate of School Education, Jammu. Thanks and regards. Namaskar.